and vendor management software. No real market update from us today. If you want to know our thoughts each day on the market, we do put out a daily market video. We spend a lot of time each morning looking beyond the numbers. So have a look at that video. It's on ShareCafe and Financial News Network every morning. Don't forget to ask questions. Type the questions in the Q&A box provided. Try not to be anonymous, because if you are and there's no time to answer those questions, without your name, we have no way of following up on your behalf. So let's make a quick start. We have first up Kingston Resources, ASX code KSN, market cap around $37 million. We have with us Andrew Corbett, who is the Managing Director. The company is a gold producer operating the Mineral Hill mine in Corbett, New South Wales, and advancing the Misima gold project in Papua New Guinea. Andrew, thanks for your time. Over to you.
G'day, Tim. Thanks for having me today, and appreciate everyone's time today to listen to the Kingston story. It's a fantastic year for Kingston in terms of our development and progression. So it's a good time to be talking. So in January this year, we became a gold producer. So I'm going to talk you through that and the Mineral Hill project, and also the Misima development project we have in PNG. So if I can just move forward on the slides. Yeah, one more, thanks. That's it. So looking at Misima, just quickly on Misima, and then we'll get into some detail at the back end. But it's a large development project in PNG. It's produced 4 million ounces previously when Placidome owned it. We've currently completed the DFS. So over the last 3 or 4 years, we've progressed from 49% ownership to 100% ownership. 2.4 million ounces of production target, 130,000 ounces per annum. It's a big gold project, great NPV, and provides a lot of optionality to shareholders with Kingston at the moment, particularly around the share price. It's a big open pit, 6 million tonne processing plant. You can see the numbers there of 6 billion of revenue and all-in sustaining numbers. So very economic and a large project for us. So our current reserves for Misima is 1.7 million ounces of recovered ounces. So it's a big project. We're currently running a process to try and find a development partner for that, and we'll talk about that shortly. And then in Mineral Hill, we own 100% of that asset. We purchased that project off a private family who are now one of our largest shareholders. That project basically started our production strategy about building a gold company, and Mineral Hill's our first sort of mine in our portfolio. Currently processing from tailings, which will take about another 18 months. And then we're also in the process of developing a 5-year mine plan, which will take us towards 2029, 2030 in terms of mine life. Recently announced a $10 million debt facility, which is another big tick for the project and the strategy, because there was a lot of DD done on that independent due diligence by the debt providers, and they're very excited about what they've seen at Mineral Hill. It's all about the infrastructure and approvals at Mineral Hill, which we'll go through shortly. If I can just move forward on the slides, please. So a quick one on the market cap. I'll let you guys come back to this. Obviously, 37 million market cap at the moment, pretty low enterprise, around $30 million Aussie dollars. When you consider we've got the best part of 2 million ounces of reserves and best part of 4 million ounces of resources. So in terms of any multiple, we're pretty cheap at the moment. Very experienced board and management, a lot of mining experience there. Mick Wilkes has built 4 mines. I'm a mining engineer, has operated mines. And Tony Weeby was also chairman of Aurelia when they built Hera. So we've got a lot of experience there, and very strong support with 5, 6 big shareholders there. You can see there, all family offices, high net worth individuals. Next slide, please. Next slide, please. So Mineral Hill, what did we buy back in January? We paid $23 million for this project, and that's how Quintana got their 13% shareholding in Kingston. We've got an approved MLs, we've got a large exploration portfolio. Current reserves are modest, about 70,000 ounces, but that's going to grow as we work on the mine plan we're currently doing. 500,000 ounces, just under gold equivalent in resources. We expect it to be basically 2 small open pits and a couple of underground projects. Now, the beauty of our underground projects is that both of them currently have declines and portals in place, so we're able to leverage off what was done in the past. Very well located in the Cobar Basin down in the south there. You can see the tenement package. residential workforce, and we run off mains, good access to water. So it's quite a very well set up operation for us. Next slide, please. So the strategy right now with Mineral Hill is get that 5-year plan in place and get it in by Christmas. And most of that will hopefully be in reserves and will be some production target, but that will demonstrate the mine life that we think we've got at Mineral Hill, and then start to look at further step out exploration. The first 2 pits will be Pierce North and South, and then we'll go underground at the SOS. We're currently doing some studies on refurbishing parts of the plant which have been on care and maintenance since 2016. And like I said, all the approvals are in place, and we completed that debt funding to help with those refurbishments. Next slide, please. So what does it look like production-wise? Tailings production till out to 2023, so the end of 23 to early 24. Then we've got 2 open pits which will run for about a year. They're quite small but very high grade, so not only will that add mine life, it's going to lift our production base from where it is today at about 15,000 ounces a year, and hopefully more than double it. SOS underground, high grade, polymetallic, both copper, gold, lead, zinc. So we will be producing copper in the next 2.5, 3 years from the SOS underground. And then we've got the Jacks Hut and Parker's Hill targets, which will extend it well past the 5-year mine life. Next slide, please. So current production is about 1,200 ounces a month coming from tailings. We lifted production last quarter about 32%. We are expecting a significant increase on the previous quarter during this quarter. In fact, we're very happy with how July and August are tracking, both in terms of production and costs. So that's really good for shareholders to be looking forward to the current quarterly production. We're running at about 700,000 tonnes per annum. For a very small plant, that's a great run rate. We're very comfortable at that run rate, and it demonstrates the ability of our own internal growth opportunities at Mineral Hill. The nameplate of the original plant was 350,000 tonnes, and we've already got the back end running at 700,000 tonnes. So there's a lot of upside there. Next slide, please. If you can just click through this one, just let it all run through, that's great. So you can see here, this is a very tight footprint. I've got basically 8 targets to show you there. You can see the Pierce open pits, they're high-grade gold and silver. They're very close to the processing plant. Basically, everything is within 1 kilometre of the processing plant. They're already in resources. We're doing the reserves for that. The next one to come cab off the rank will be the Southern Ore Zone, which is an underground, which I said earlier has got decline on the portal. That's number 8 there. You can see some really nice high-grade intercepts, quite wide as well. Now, the important thing here is all of these holes are historic and all of them are still in place. They have not been mined. So all of these targets are for us to continue to develop, get them into resources, get them into reserves, and get them in the mine plan. Next slide, please. Southern Ore, Pierce South, what does it look like? You can see there 39 metres at 4 grams gold and 37 silver. So quite high grade, very, we do expect to obviously have good cost, good low cost base here and good margins on this dirt because it's high grade dirt. So we're really looking forward to finishing the tailings and getting the open pits going. This historical reserve was done at US 1,300. So we're going to upgrade that this quarter. Next slide, please. Southern Ore Zone. So what's important to take away from this side here is that underground development you can see there is in place. We have access to that portal. We can drive underground along the existing development to the Southern Ore Zone. The Southern Ore Zone is currently just under 2 million tonnes of resources, and we're working on what that reserve is going to look like at the moment. You can see those drill holes there. We announced those in the last few weeks. Very high grade copper, lead, zinc, polymetallic ore bodies, so very similar to Hera, not dissimilar to what Federation is going to look like. So it's what investors understand to be in the Cobar region, very typical for what people should be looking for. Next slide, please. Jacks Hut, this is one of our next opportunities. We announced these drill holes last week. This is copper gold dominant, so no lead zinc in this, which is quite exciting. This is one of my favourite targets for a Mineral Hill. I'm looking to try and develop an open pit and underground strategy here. Look, it's going to take a little bit of time because we need to drill it and work through historical drilling, but you can see there, 27 metres at 1, 77 metres, just under 1% copper with some high grade structures within that. So there's potential that this could continue underground, but this was a historical underground that produced as well. Next slide, please. In terms of regional exploration, so on top of the 8 targets that we've talked about within our mining licence, of which most of them are in resources, we have another 10 regional targets which are in the southern section of our exploration licence, and they are mostly surround the mining licence. And we're now starting to work up targets within our EL, that 8334 to the northwest there of our mining licences. So we've got plenty of targets and plenty of excitement for exploration over the next few years. Next slide, please. So I'm just going to move through Misima and show you basically a bit about that and where we're going with that project. And you know, with the inflation that the whole market's experiencing in terms of capital, we've made the decision that we need a joint venture partner. So we are running that process at the moment. Whereas Misima, it's an island, 600 k's there, east of Port Moresby. Very long gold mining history. There's 20,000 landowners that live on the island. All of them are either producing gold today themselves or involved in mining with FIFO. So very supportive landowners, and it's a great place to be in PNG in terms of access, logistics, and support by the landowners and the government, local government. So we're quite excited about where this project's going and what this can do for shareholders. But we acknowledge that for Kingston at our 40 million market cap, we're going to need a partner to help us get it there. Next slide, please. So just the results of the DFS, which we published in the last few months, 3.8 million ounce resource, 1.73 million ounce reserve. It's a large scale open pit. There's a big chunk of silver in it. So we've also produced about 4 million ounces of silver over the mine life. So total production is at 2.4 million ounces of gold, about 130,000 ounces a year for 20 years. So we've already got a 20-year mine life. The current resource is just goes to the base of drilling, and we do expect it to keep growing once we keep drilling. So it's going to have a longer mine life than 20 years, we think. Very attractive economics in terms of NPV and IRR. It's a big project, and we're really looking forward to finding the right partner to help us unlock this value for shareholders. Next slide, please. So what does Misima look like? You can see here, this is an open pit diagram. That open pit you can see there called Yamuna. That's the main ore body. 96% of the ounces come out of Yamuna. It's about 3 kilometres long. It's a big open pit. It gets to about 400 metres in depth. But basically, we will be in there mining that for 20 years. There's a couple of satellite pits there at Iwatnona and Kulamalia, but majority of the time is spent in Yamuna. So very simple project. We're reutilising the old processing plant location, single haul road. You can see the diagram there that demonstrates what the gold plant looks like. It's pretty bog standard CIL circuit, which operated for 15 years previously and will operate very successfully before. Misima's historically sat very low on the cost curve because it's very soft rock. So it's a great project, and like I said, it provides shareholders with great optionality here over the gold price. Next slide, please. So in terms of last one on Misima, in terms of approvals, we are working on them now, and we will submit those either this quarter or next quarter based on our strategic review process we're running at the moment. And next slide, please. So in just wrapping up, we've got an experienced management team. We are focused on gold and copper. It is our experience. That's where we normally traditionally operated in as a board and management. We are looking forward to developing the Mineral Hill mine life, bringing these resources into reserves and showing investors what Mineral Hill can do. Very focused on growing from Mineral Hill with the mine plan, unlocking this hidden value with Misima, and we do think it's hidden value in our share price. So at 40 million, you're sort of either getting Mineral Hill for free or Misima for free at the moment. So we get this strategic review underway, get it completed, and work out a way forward there for Misima. And thank you everyone for your time today.
Thanks, Andrew. Really interesting. That Misima looks very exciting. What sort of JV partner? What do they look like? Any names you can mention? Or?
No, I can't mention any names, but I can say what I guess technically we would be looking for is someone that obviously has a balance sheet, so a financial partner, but also an operational partner, because Misima's 6 million tonnes worth of mining throughput, so it's a big open pit. We're a small company, so we really do want that partner to not only bring a balance sheet, but also operating experience, ideally operating experience in PNG or in similar environments.
And you've been fortunate enough to secure some funding. There's some milestones. Obviously, this funding is just in relation to Mineral Hill. What sort of milestones are expected before you can achieve the next 5 million?
Yeah, it's pretty simple. It's about proving the mine life, getting those reserves and resources in place to show the debt provider that we've got that mine life. We're targeting this 5-year mine life. The debt facility is 4-year money, so that gives you a sort of good feel of what they're looking for. They want to see us demonstrate that 4 to 5 year mine life, and we're very confident we can do it. We've already got 18 months right now in the tailings. We've got another year already in the open pits, and the underground's just going to keep building out on top of that. So the 4 to 5 years is we think very comfortable.
And is it fair to say you haven't drilled at any great depth yet? Is that the further opportunity there?
Oh, absolutely. Mineral Hill has last major drill program was in the 90s. We've done a very small drill program already, about 8,000 metres, and that was just confirmation and a bit of resource work that we wanted to get done. There is a huge untapped exploration excitement at Mineral Hill. Majority of the ore bodies are open. There are a number of drill intersections, historical drill intersections that are very economic, that have never been followed up. So we've got all that to come.
And Andrew, there's several more questions coming through. I might get you to answer online if you don't mind. But one of them is what do you think the market's kind of undervaluing in regards to Kingston at the moment?
Yeah, I think the market's is concerned about how we go with Missima and the direction with Missima. Obviously, at 460, 470 million in capital, the market doesn't want to see Kingston raise that money at this point, and we understand that. So I think that's part of the concern we have. And also, it's still very early days at Mineral Hill. We need to demonstrate what production is this quarter. We need to keep demonstrating where this mine life's going, and that's all going to play out over the next 2 quarters for Mineral Hill. So we're pretty confident of unlocking the value and demonstrating to the market what the potential is of both Mineral Hill and Missima.
Great, Andrew. That's all we have time for. I'd appreciate it if you could answer some of those questions now. If not, I'll shoot them to you over the weekend. But thanks for your time.
No worries. Thank you.
Okay, next up we have Suvo Strategic Minerals, ASX code SUV, market cap around $44 million. We have with us Henk Ludik, who is the Executive Chairman. Suvo Strategic Minerals is a dual commodity Australian mining company focused on the development of their Gabon White Cloud project located in Western Australia. Over to you. Thank you.
Good morning, Tim, and thank you for the kind introduction. Good morning, ladies and gentlemen, and thank you for joining us. I'll quickly just jump into a brief overview of Suvo for those of you new to the story. But Suvo is, as Tim has outlined, a dual commodity play in the kaolin and silica sand space. We are listed on the ASX with a market cap of circa 43 million. We have a portfolio in Australia consisting of 3 projects, 1 operating asset. Our Patong operation, as you can see there in Victoria, is the only high-risk kaolin operation in Australia. We have 2 substantial silica sand projects in WA, the Eneabba Silica Sand project, and then Mushay, which we are completing the transaction on, but we've got a binding agreement in place around that specific asset. And the Gabon project in WA will potentially be one of the largest kaolin projects to be built in Australia. We are focused on, as I mentioned, establishing or resetting the operations at Patong. It's an operation we bought from a large multinational at the beginning of 2021. We've been turning that asset around for the past 6 months or so. We are producing at the moment circa 25,000 tonnes per annum out of that operation. There's an ongoing turnaround strategy, which I'll speak to later. But that gives us the opportunity to look at the product basket produced out of that asset. One of the very interesting opportunities sits within the emerging green cement industry, which is forecast to be about $56 billion by 2027. And that is supported by legislation being introduced by government and commitments made by international governments. Our Patong upgrade, I'll share a bit more detail on a dedicated slide later on, but that's primed and ready to go. Hopefully we will be able to commission that beginning of 2023. And this is a project that we are upgrading to meet the increase in demand for hydrous kaolin products. We are targeting emerging markets with the resource, and hence we'll look at other opportunities as well. And we have gone through a bit of an evolution of the board earlier this year, and we believe that the new members of the board and the operational team equips us well for the next stage of our corporate evolution. We also believe that ESG is not something you speak about, but you actually do something about it. And that is pretty much the center of our credo as to how we are a sustainable producer in the sector. Moving on to the next slide. You can skip past this one. Thank you. We believe that the kaolin market offers a very interesting and compelling investment case because it's such an opaque market. It's effectively simply a white clay that's used in a broad range of industries. It's an alumina silicate. The global supply as at 2019 was about 27 million tons per annum, 50% of that being hydrous production. Now, hydrous kaolin is effectively simply a premium product where you effectively use a water washing process to wash out the nasties and the impurities in your project or your product, giving you a superior product to dry process kaolin. On that chart, you can see that the Ukraine traditionally supplied about 2.4 million tons per annum, or circa 10%. With the ongoing conflict with Russia, that's obviously fallen by the wayside, which has placed tremendous pressure on the supply side of the market. From a global demand side, we expect that the current CAGR in the market of about 5.5% will be sustained through to 2027, which is near term. And we'll probably see a number in the range of 38 million tons per annum. Once again, 50% of that attributable to the hydrous kaolin portion of the basket. Quite interesting to note that that 38 million tons doesn't necessarily include bulk volumes in new emerging commodities such as metakaolin for use in cement, but we'll talk to that on the following slide. But this rapid demand's been pushed by things like an increase in demand for automotive primers, a high demand for ceramic tiles as the global economies continue to expand, and in the developing markets, a larger amount of the populace continues to move into the middle class. And then kaolin is also used as a pharmaceutical and a cosmetic product, and those markets are also seeing some tremendous growth. An interesting point to note is everybody expected that the paper market would collapse 10 to 15 years ago. With the resurgence of e-commerce during COVID specifically, we've seen a tremendous increase in the paper packaging side of things, which creates further demand for kaolin specifically in the high-end coating sector of the basket, which is quite exciting for us. Global market value of $3.1 billion, and we've seen this CAGR of 5.5% as a steady growth rate. So it really is an attractive opportunity for small producers such as ourselves. If we can move on to the next slide, we've spoken about this before, but we see the cement sector as a very interesting sector to challenge and to potentially consider for adapting new technologies and products to address the emissions from the sector. The sector, as I've presented various occasions, contributes to about 8% of annual global emissions. Not my numbers, those numbers were compiled by international bodies and confirmed by Rethinking Cement Beyond Zero Emissions earlier this year. And we've got a 2030 target where we effectively have to, from a government perspective, reduce our greenhouse gas emissions between 26 and 28% below the 2005 levels. Now, there's a couple of fronts you can try to tackle that, but I question whether or not we'll be able to exchange the current vehicle fleet with EVs. And I also wonder how long it will take us to get the infrastructure to support that transformation. The second part is it's interesting to say that we can replace all of our emission-producing energy sources, but once again, I just wonder how easy it would be to rapidly change over to renewables to push all of those old systems out of the market within this time frame. But I think the important takeaway is that both industry and government is supporting a rapid reduction in emissions from our economy, our industry. And I think the cement space is certainly an interesting space to contribute to this agenda. The product that we will be producing to feed into this market's metakaolin, it's effectively a flash calcined or dehydroxylated kaolin. We have seen prices in the market for this product ranging between $530 US to $840 US per ton. Currently, there's no onshore production. So we will be the first one out of the blocks to potentially produce this. In order to do so, we've entered into a materials transfer agreement with probably some of the smartest people in the sector and in the space, and they are at Felix, also an Australian listed entity. And we have commenced work with them to test some of our product for suitability. We've tested product, or the previous owner of Betong tested product in 2014 for suitability, and those test results were very encouraging for suitability in this application. We've also tested some product from our Gabon project in WA with FL Schmidt, a well-regarded, well-known international company who's also a market leader in the space. And the feedback there was absolutely phenomenal, and our product is potentially on par with the best in market. We haven't tackled this journey on our own, and hence we are working with industry partners, development partners and industry bodies to ensure that we do develop these products in a responsible and considered manner. If we can move to the next slide. Thank you. Betong is an interesting operation. We've picked this up in the past 18 months, and it allows us to do a couple of very interesting things. We moved from that explorer developer stage to an operator, and we've been able to do so fairly rapidly. And with the existing turnaround, we definitely are securing a very interesting foothold in the sector, where we will be producing more meaningful tons within the near future. As I've mentioned a couple of times, we are the only Australian producer of hydroskaolin, which puts us ahead of the pack and our peers. And we have infrastructure, SOPs, and products that's been developed over the course of 50 years. So we have that deep embedded operational excellence and operational experience to be the preeminent provider of this product in the market. At Betong, we have 3 satellite pits, Betong, Trawalla, and Lalal, with a combined indicated JORC resource of circa 13 million tonne per annum. And that gives us a multi-decade life of mine at the operations. As I've mentioned, we are busy with the optimization and upgrade of that plant, with circa 2.3 million left to spend on that project. And we anticipate that this will be completed by Q1 2023. And once again, I'm quite excited about the fact that we are fully funded to complete that development and that upgrade. This will reinstate the nameplate capacity of about 60,000 tonne per annum. And we've worked with a number of parties to validate that number. And that will allow us to produce circa 50,000 tonne per annum at approximately 83-84% utilisation rates. All the work that the team's been doing over the past 6 months also allowed us to start putting our production forecasts into the market and production guidance. The production guidance allows us to communicate clearly to our shareholders as to how we are performing at these operations. And that comes with the good and the bad. But I think that level of transparency is absolutely valuable for our shareholders, specifically given the opacity in the market and the question marks around things like operating cost, sales price, etc. So the upgrade will rapidly allow us to reduce our all-in sustaining costs, especially after you can see the orange block there. That's inflationary pressures that the sector has focused or seen over the past 12 or so months. Next slide, please. I think I'm near the end of my slots, so I'll just quickly touch on this. We've got an extensive list of off-takers at the moment. We understand pricing, we understand the products, and we understand the demands from the client. This will allow us to reshift our basket from a weighted average sales price, which is a tremendous opportunity for us to extract more value from this long-standing asset. Next slide, please. Our Gabon project, we are still busy with the pre-feasibility stage there. That's potentially an asset which will allow us to produce up to 200,000 tonne per annum. And we've tested the product for a range of, or the commodity for a range of potential products across ceramics, paper coatings, paint, cosmetics, and metakaolin, which all sits toward that high end of the product basket. Next one, please. We also a silica sand player. This is an interesting market. The UN Sand and Sustainability Report in 2022 confirmed that there's a massive opportunity for emerging producers, given that a lot of the sustainable sources are coming to the end of life. And we see that this sector will continue to rapidly grow. The consumption of silica sand is one of the largest consumed commodities on planet Earth. Okay, thanks for that. If we can step back to the previous slide, thank you. So we've got two projects at the moment, Eneabba and Miche. We released an announcement on Eneabba just this week, where we have agreed access with a private landowner on our tenement. This allows us, since it is on cleared farming land, to potentially fast track the development of the project and be the first horse out of the gates on this one, as we won't have to go through extensive processes obtaining clearing permits with the EPA. So the scoping study is well advanced. We are refining it for the new infrastructure, which is potentially located on the site, which covers water, power, the road infrastructure, and then obviously the rail, which is quite close by. We located 165 kilometers from Geraldton Port, so we will be advancing discussions with that portion of our export value chain or supply chain as well in due course. But our development work, our drilling work will start within the next quarter, and that will enable us to potentially be prepared to be the first producer of meaningful volumes of silica sand in WA. So very exciting times for us. From a corporate perspective, why invest in us? As we've briefly touched on, we will be increasing production at our existing operations. By being smart about our weighted average sales price in our basket, we'll be able to expand our earnings. We are growing our market presence. We're leveraging existing relationships to enable us to do that. We are talking to new players, most recently C&D Logistics, who's a Fortune 500 company who is currently trialing some of our kaolin product from Patong. And we believe that the cumulative effect of this will be substantial growth in shareholder value created. Next slide, please. Just a couple of examples of how we live ESG, but we are effectively looking at how to reduce our Scope 1, Scope 2 emissions. We are working on reducing our water energy intensity. We are engaging the community to ensure that local employment opportunities are created in Ballarat region, and we will also do that for our WA assets. And we are certainly looking at how we can extract more value from our tailings facilities over at our Patong operations. Just a quick snapshot of our board, most notably Dr. Ian Wilson, who was actually one of the exploration geologists that started the drilling campaign at our Patong operations. So very pleased to have his wisdom and knowledge on board to guide us. And just ramping up, we closed the share price of about 7.5 cents towards the end of last week. So unfortunately, it's come off a little bit given the market turbulence this week. But we do believe that our focus on developing these critical and scarce resources will continue to be put us in that position where we are the preferred industrial mineral player in this space. We are targeting a first quartile from a basic perspective, and we are focused on creating value through focusing on not only implementing ESG as a guideline, but also extracting real value from that by being efficient in how we operate. Tim, that's it. Thank you so much.
Thanks, Henk. Unfortunately, we have no time for questions, and there are a few questions there. If you don't mind typing in your answers, there's questions there in regards to the green concrete additive, the types of kaolin, and some more questions around kaolin pricing, if you don't mind.
Happy to do so. Thank you, Tim.
Great. Thanks, Henk. Next up, we have Felix Group Holdings, ASX code FLX, market cap around $25 million. We welcome back the CEO, Mike Davis. The company centralises and streamlines vendor management and source to contract processes to significantly increase productivity, manage risk, and reduce spend. Mike, thanks for your time. Over to you.
Thanks, Tim, and thanks for having us again, and everyone joining for your interest. I'm going to do my best to keep it to 10 minutes and do it a little bit differently today. Rather than a page turn, I'm just going to pull out a few key slides from our annual presentation. And if everyone's more interested in the 101, they can read through in more detail. But what I really want to focus on today is what we've got to be really excited about at Felix and what's coming. So, Colin, if you're there, do you mind flicking us down to our slide number 12 per the bottom right-hand corner? And I'm going to quickly cover a little bit about what Felix is and why it matters with what we're doing and who for, and then get into what's happening now. So, as Colin's flicking through, I'll just get going. We build enterprise technology and software for construction and related industries. And our platform is all about connecting, as you can see here, that's the slide, large contractors, cross construction, and you can see asset owners and services contractors with all of their third-party vendors, subcontractors and suppliers who build and maintain their capital works projects. So you can see they're big names and they work often with thousands of different subbies and consultants and suppliers to actually build the projects and deliver the works. So we're a platform with enterprise technology for the contractors, and it's a marketplace of all of the vendors. So other contractors can find and engage with other vendors in the marketplace who might have been onboarded by, say, another contractor. Should be some familiar names on the deck if you any sort of familiarity with the industry. Probably notably their CIMIC Group, which was our most recent announcement yesterday, who've renewed their 3-year term. And CIMIC is Australia's largest contractor group. And if you're familiar with them, you'll know that they're owned by AEST Group, who are the parent company, the world's largest contractor group. So we think there's significant tailwinds for sales into that global group. Probably just before we move on, I guess why vendor management and procurement? What's the sort of perfect storm that we're seeing at the moment? It's the operating environment. So think about things like ESG and the Modern Slavery Act coming in, the reporting requirements around that, net zero, and the shift towards that. So ESG for all of these companies is massive, as we just heard from the previous presentation, and their reporting requirements around it, and third-party vendor compliance. So it's never been more important to understand who the vendors are you're working with, and automating processes and reporting around those. So Felix, what we're seeing en masse is the industry a shift towards managing that at the enterprise level across all their projects. And Felix, we believe, is globally best in class at what we do in this sector. So Colin, we'll shift down to slide 14, if you can. A little bit behind time, so I'll spin through. So look, what we're really excited about at the moment, and if you sort of, our focus there, if you just remember the names on those slides or any of them, has been on selling, significantly investing into our enterprise solution. We've probably invested about $20 million to date in building out that platform and selling into the Australian and New Zealand market, and built really great traction there, and what we believe is a sort of market leading vendor management and procurement platform for our sector. But what's super exciting at the moment is we've now got a significant step change opportunity to really go global with Felix, and that's predominantly through our partnership with In8. And if you're not familiar with In8, they're a global leading construction software suite. So Felix is really focused on procurement, and In8, like the likes of Oracle or Autodesk, those really, really big names, they have a much broader solution suite. So in February of this year, we formed a strategic partnership with In8, and in May this year, we had a strategic placement that they were the cornerstone investor in, and invested $2.7 million into Felix of a total $7 million round, well supported by leading institutions as well. So In8, just by way of context, they're owned by Kiewit Corporation, who are the third largest construction company in the United States. So really significant backing and ownership, and was spun out as a wholly owned subsidiary. So Felix is a really neat hand in glove fit with In8's broader solution. It was a real gap in their their broader product suite. And we've formed this partnership to really fill a burning hole for their 850, circa 850 global customer base. So what we're in the process now is integrating our platform. So there's deep data sharing and collaboration between the platforms, as well as a sales and marketing go-to-market strategy, where we'll be leveraging all of Innate's global sales teams, project delivery and implementation teams to implement the software, and support teams to actually support user support in all of the different regions. And we've got a commercial arrangement with them where on a per contract basis, we pay a commission. So if we zoom out, where we're at now, that really sort of the nexus of is a really significant step change opportunity and really capital light global expansion model, which is obviously really important in the current operating environment for companies like us, to significantly expand the customer base of Felix, generate pipeline through Innate's existing global customer base, and continuing, we've got a number of joint opportunities in the pipeline with them where we've formed joint bids. As what we're seeing more and more of is large contractors that come to markets with big RFPs, vendor management, third-party vendor management and procurement is really stacked ranked at the top or close to in order of their priority. So that makes us a really strategic priority for Innate to solve that problem for their existing and prospective customers. So we're really excited with some of the international names that are quite advanced stages of the pipeline from multiple regions. And expect to be able to bring news to market, hopefully on some of these soon. But yeah, so real game-changing opportunity, and a significant amount of work's been going on, I guess, behind the curtains to really bring this to light. We've been, just from a platform point of view, a heap of work focused on at the moment of internationalization of the platform to make sure that we're really at a strong state of readiness. So that's things like multilingual capability, data localization, as that's a requirement if large contractors internationally are working on big government jobs or GDPR compliance. We're fortunate that a number of our existing large Australian domiciled customers have used Felix on major international construction projects and have global supply chains. So we've already baked in a lot of internationalization in the platform, and it's the last, I guess, couple of big ticket items to make sure that we're really turnkey ready for global rollout. Colin, just to finish off, we'll go down to slide 18. Looking, we've got a minute and a half or so to go, Tim. And we're just going to talk about our, I guess, FY23 priorities and what we're really focused on. As I mentioned, significant investment in the platform to date and a really strong and growing pipeline. So for us at the moment, we've got the cost base and the infrastructure that we need to really leverage that top line growth, and that's our focus this year. We've really dug into the Innate opportunity and Kiwit, their parent company. So the framework is there, and we're at a stage of readiness now where it's just about execution. Like I said, there's a number of significant deals at the advanced stage of the pipeline from international regions. So conversion of those. Got some really exciting platform initiatives outside of the internationalization things that I spoke about. So around AI, moving into contract management, enhanced capability. So we're really excited about the value that will unlock with our existing and prospective customer base as well. Hello, Tim, I can see you.
Keep going.
And yeah, lastly, all about capital efficiency. I think in the current market environment, we're operating really lean. I think we're fortuitous that we raised the placement when we did. The balance sheet's strong, and we've got the team now that and through the partnership to significantly scale the platform in terms of key customer adoptions and expand globally. So exciting times at Felix. Right on 10 minutes, Tim.
Well done, Mike. Well done. Can we just go back a step? And so you've just renewed the contract with Cynic Group for 3 years. Is for a client, is it a cost benefit in using your platform, or is it time efficiencies, or is it the compliance aspects?
There's significant efficiencies in automation of processes right throughout. If you think about the number of teams that they'd have evaluating large bids, approval workflows at all stages, so real automation of those processes throughout, as well as the big focus is on supply chain risk management. And in the current environment with input costs, global supply chain, availability of talent, we've seen a number of large construction companies hit the wall through really razor thin margins. Felix is our core capability in providing visibility and process governance through the supply chain is really critical.
Yeah, I mean, that was my next question in terms of how do you assist in that supply chain, given we have seen some building collapses recently? Can you just kind of give us a bit more colour?
Yeah, absolutely. So I think that contractors have a critical dependence on their third-party subs to actually, they do all the work, subcontractors, no contractors do any of their work. But there's been the paradigm shift is traditionally project directors would just have everything on their black book, and there would be no organisational visibility on who the vendors are you're working with, what their capacity is and viability is to actually work and deliver the jobs that you're engaging with. So at enterprise level across all projects, it really provides, and in banking it's called know your customer. Here we've got know your vendor, understand who you're working with and what visibility of all risks through data availability. So when we go to make decisions, that data is there and we can make informed business decisions on the fly and manage risk.
And in Australia, what's kind of your average contract size, and what's the sales process look like, and you know, give some more colour on your client base?
Sure. Yeah, traditionally our annualised contract value has been at around that 70K mark, AUD. We think we've got a real near-term line of sight to getting that up over 6 figures. Also through the innate global opportunities, we think that those will come at a significantly higher clip, and it'll be nice to invoice some of those in USD with the current exchange rate as well. What was the last part of your question?
Oh, just on sales process. How does that work?
Sales, typically about 6 months. It's enterprise selling, so there's a lot of stakeholders involved. And if anything, I think in the current environment, economic environment, and coming through COVID, that's probably been our biggest challenge, is deal drift and that sales cycle extending, because companies just probably get a little bit more nervous around committing resources to change management and pulling the trigger on new strategic initiatives. But I think we've seen the bottom of that, certainly with COVID, and seeing that improving.
And so you mentioned Innate, who's your new JV partner. They've got about 850 global customers. How are they helping you? Who's their parent? What was that? Where were they spin out of?
Kiewit Corporation, KIEWIT. And if you go back to our placement announcement in March, there'll be some more detail in that preso. So obviously Kiewit are a key target for us. They're the US's third largest, I think, construction company, and maybe 200 or so in the Fortune 500, been around for 150 years. So Innate are a wholly owned subsidiary, and they're a global construction software leader. Rather than build themselves, they've decided to partner with Felix. They've invested into Felix, partner with Felix, and they think this is a real burning hole across their existing customer base and and obviously joint bids moving forward. So they've told us expect a lot of pent up demand. So for us, it's just what's coming down the pipeline. There's, I think, going to be that's not going to be the issue. It's for us, it's execution as we're taking a big step up.
And a bit more CapEx in terms of people and adapting your platforms for kind of offshore jurisdictions.
Yeah, we've sort of ramped the team following our IPO in January 2021. So we think we've got the team now, and as I said, we're really leveraging Innate's global resources and teams and infrastructure. Their sales teams are going to be selling Felix, they'll be implementing it, and they'll be supporting it. So that provides us a really great leverage to drive scale without commensurate investment into headcount to deliver on those deals.
I mean, it sounds like a great deal. The market really hasn't jumped on it. What are the milestones you're looking for towards the end of the year?
Yeah, I think, and chatting to sort of institutions as well, everything looks fantastic on paper. We need to frank this now with a few contract wins that come through the partnership and some international contract wins. And I think that sort of really crystallizes everything that we're talking about that's exciting. So for those of us working sort of behind the scenes, where, you know, it's palpable, the sense of excitement and the tangibility of it. We've just got to execute that and deliver to market now.
Thanks, Mike. I've always found it a fascinating story. Thanks for your time. Have a nice weekend.
Thanks, Tim. Great to see you. Thanks for having us.
Thank you. Next up, and finally, we have Magnis Energy Technologies, ASX code MNS, market cap of around $460 million, 1 year return of up 30%. We welcome the company's new CEO, Mr. David Taylor. The company aims to become a leading global producer of next generation green credentialed lithium-ion batteries. David, welcome to the webinar. Thanks for your time.
Yeah, thanks, Tim, and I appreciate the opportunity to present to everyone today, and thank you for taking the time to join us. So today's presentation is really going to focus on a number of key developments that have occurred since my commencement on the 1st of August that I believe place Magnis in a very strong position to take advantage of the opportunities presented by the global energy transition. So if we just move to the agenda on slide 3, I'm aware of that many of you who have joined today are familiar with Magnis and its journey. But for those of you who may not be as familiar with Magnis, I'll commence with a short overview of the company, including our vision, the assets and strategic investments we hold, our unique positioning in the market, and our focus on ESG. I'll then discuss the recently signed US Inflation Reduction Act and the benefits and opportunities that this provides for Magnis, before moving on to providing an update on the progress of the Im3 NY plant following my recent visit there. Finally, I'll briefly discuss the extra fast charging results from our technology partner C4V and conclude with an overview of our near-term focus. So moving on to an overview of Magnis and our vision on slide 4, we really are seeking to be a vertically integrated company that delivers high quality, high performing, safe and sustainable products across the lithium-ion battery value chain. Our current areas of focus in this value chain are on the graphite and the anode materials sector, the battery technology, and of course the cell manufacturing. Slide 5 outlines our current portfolio of assets and investments across that battery value chain, including the cell manufacturing facilities in New York, of which we own approximately 60%, and of course in Townsville, which we own 33%. The investment in our battery technology partner C4V, which is around about 10% investment value, and of course our wholly owned 100% Nachu graphite project in Tanzania. So moving on to slide 6, Magnis really presents a unique investment opportunity in the Australian market, being the only ASX listed company with a lithium-ion battery manufacturing asset that has moved into production, utilizing a battery technology that doesn't use any nickel or cobalt. With some strong policy, social and regulatory tailwinds in key markets, an experienced and diverse board and management team, access to the unique battery technology IP, and ownership of the high quality critical mineral asset in Nachu, we're in a really strong position to capitalize on the growing global demand for electric vehicles and battery energy storage systems. An extremely important foundation of our business is our focus on ESG. And on slide 7, it really highlights where our focus is in meeting our sustainability commitments. In terms of the environment, we're really focused on producing some of the greenest and most sustainable products in the world. For example, our cell manufacturing plant in New York is predominantly powered by renewable energy, utilizes existing infrastructure. It also focuses on the other aspects of revitalizing the community and also minimizing waste and focused on recycling of a lot of the products that come out of the actual process. From a social perspective, we're committed to making a positive impact in the communities that we operate. And this is no better demonstrated by the work that we've been doing in Tanzania as part of the Nachu project to support improvements in housing, in education, and also in skills development. So we think this is a really important aspect of every project we do. And that includes the Im3 project, which is very, very focused on the revitalization of that particular community following the exit of the IBM manufacturing some time ago. On the board side, we have a very experienced and diverse board who has really broad sector experience across many different industries, and they are really focused on ensuring that we have the best practice governance systems, controls, processes, and policies in place, as well as working with management to guide the long-term future strategy of the company. So with that as a brief overview and introduction to Magnis, I'd now like to discuss the recently signed US Inflation Reduction Act and the opportunities and benefits that provides for Magnis and its partners. This is a really important piece of legislation to accelerate decarbonisation and the overall energy transition and advance the manufacture of batteries and critical minerals in the US, but also many other forms of clean energy technologies. So the key section of the Act, which is of most relevance to Magnis, is what's called Section 45X. And this particular section focuses on the advanced manufacturing production tax credits across a range of different technologies. The most important section of this for Magnis is the battery cell tax credit, which is $35 per unit of capacity of each cell which is being provided under the Act. Now, if we translate that into our recently announced production target of 1 gigawatt hour by the end of 2023, that translates into a total tax credit of $35 million. So as you can see, it's a very significant tax credit that we would be receiving as part of that particular of this Act. In addition to the direct tax credit that are provided to US manufacturers, there's many other aspects of the Act which really focus on the broader energy transition and the development of renewable energy sources such as wind and solar. And of course, due to the intermittency of the wind and solar, they heavily rely on battery energy storage systems to really even out the intermittency and to ensure the reliability, stability and strength of the overall power system. So there's a real, going to be a real drive for battery energy storage systems in terms of meeting that overall energy transition. Moving on to slide 9, one of my first actions when I started was to head over to New York and to visit and inspect the Im3 facility. I was fortunate enough to arrive just as final preparations were being made to commence commercial production, and it was really exciting to see the plant come to life while I was there. So I was very, very, very fortunate to see that. I was really impressed by the size and scale of the facility. It's the size of 3 football fields. It really is quite massive. The quality of the work that has been completed by the team and our delivery partners is some of the best quality I've seen in my career. And what really impressed me the most was the safety focus of everyone involved in that final delivery, and also the heading into operations. These facilities, you really need to focus on safety of people. You're working with cathode materials, anode materials. You've got moving machinery, and the focus on safety of the team was something which I really took away as a positive from that particular trip. I'm looking forward to heading back over to the plant shortly to support the team continue with the production ramp up and really heading towards those first cells going out to customers in the near term, and also sitting down with them and working through the next stages of the scale up plan, which will ultimately head us towards 38 gigawatt hours by 2030. The next slide is really about our recent announcement regarding the results of the extra fast charging results, which has been carried out by our technology partner C4V. And what that really demonstrated was that there was only a 3% initial capacity loss, after more than 2,600 cycles of 20-minute charge and discharge. So these results are really promising and provide a real product differentiator to the market to address what is a key concern for many buyers in the EV market about the time of recharge to capacity. So we see this as a real positive for us moving forward. The test program is going to continue on and test, see what the results are for 3,000 cycles. And so that we're really looking forward to those results. And then we're going to actually expand the testing program into 10-minute charge discharge cycles and 6-minute charge discharge cycles as well. So we're really excited about this. We think this is a really important differentiator that really drives a lot of value for end customers and end users. So that's very exciting for us going forward. Moving on to the near-term focus for Magnis, it's really, from my perspective, about generating value through focused execution and continuing to de-risk our portfolio of assets. So for Im3 New York, it's really about focusing on production ramp up and getting those cells out to customers and focusing on finalising those scale-up plans. Im3 continuing with their charging program and really focusing on product development going forward. Nachu, we're certainly focused on finalising the feasibility study, update to the feasibility study, and then really focus on moving into the financing stage of that and heading towards commencement of the mine. And then the Townsville project, we're continuing to hold discussions with a number of key stakeholders, to continue to progress and move that project forward. Tim, I think that's probably close to time, so happy to take any particular questions that may have been presented. Thanks.
There's lots of questions, David. There always is. There's a very loyal audience here.
Yeah.
Can you give us some more colour on production of the batteries? Have they been tested for quality and insurance?
Yeah, so we've got a number of cells that are currently in testing. They've been through the latest results were sort of 800 cycles of testing, and the actual results of that have been extremely promising and in line with our expectations. So that's really great, and I think that's it's proving that really proving that the process works. And all of the technology and chemistry is all coming together. So really promising results from that perspective.
And the expectations for revenue from Im3 New York is at the end of September. Is that correct?
Yeah, look, it's really heading into that sort of the last quarter of this calendar year is when they'll start ramping up. So we've got commitments that we have to make. But certainly, those revenues will grow over time, obviously, as the production ramps up. But certainly in the fourth quarter calendar of this year, absolutely.
And how is early production progressing? Given you're at the battery plant, you would have met with our analyst Di Brookman when she was there with you. Yep. Can you give us some colour on how production's looking?
Yeah, it's an amazing process. It really is. The level of technology that's involved in manufacturing these particular cells and the quality control that really goes into the process is really quite amazing. And so the production process is really, there's always little tweaks to be made as you're kind of heading into that production. But the guys are working through those issues and making sure that the product quality remains high. So yeah, very, very happy with the production results at the moment.
And is Magnis in the queue for government funding? Obviously, the Biden administration Inflation Act is ripe for someone like Magnis. Have you filed for some sort of grant application?
Yeah, well, look, we've certainly been involved in making applications. It's been an ongoing and long process in engagement with the Department of Energy. We do feel very well positioned to be able to secure some of that funding. Hopefully we'll hear soon in the next sort of few months as to how our application is progressing. But we are certainly have a number of different avenues under those various programs for funding from the Department of Energy.
And just on funding, can you give us a level, what sort of interest you're getting from an offtake agreement perspective? Is the phone running off the hook? How's that unfolding? I appreciate you can't tell us anything specifically.
Yeah, we obviously can't name names or anything, but yeah, you're right. I think the recent announcement of commercial production, we've had a number of inbound inquiries from people wanting to find out more about the actual cell technology. What's our sort of capacity, availability, and that's from a range of different markets and customers that we're talking to. So really positive response from a demand perspective.
And we're getting lots of questions in here, but they do centre around some core questions, which is Nachu. Where are we at with the feasibility? What's been the cause of the delay? When will that graphite end up in Im3 New York and the battery factory there?
Yeah, it's a good question. Thank you. We've been kind of like everyone. We've been subject to some supply constraints on the resource side, just from an engineering perspective. Having come from that world previous to joining Magnis, I'm well aware of the acute shortages in some of those resources. So that slowed us down slightly, not too much, but it did slow us down. We are in the midst of finalising all aspects of that feasibility study right now. So we do expect that will be released very soon. So that's where we're at with that particular one. In terms of where we're heading and production of graphite, look, we've got a financing process to go through. That'll take some time in the current environment, and then we've got effectively a 2-year development program to get the mine up and running into operation. So financing first, get all the funding in place and locked away, and then into delivery phases. So there's still a bit of time before we get into that.
And David, let's finish on a couple of questions, if you don't mind. I mean, you're new to the business. What attracted you to the company? And Magnis is kind of there's a lack of institutional shareholders on the register. How can you encourage or what are institutions looking for at the next stage for Magnis before they become investors?
Yeah, sure. So look, the company from my perspective, I have a real passion for the green energy sector, and this. Looking at green technologies and advancing, effectively making a positive contribution to the community and the environment through what we do every day. I thought that Magnis had, built a great platform of assets and investments across the value chain within that space, and it was a really, from my perspective, a great opportunity to take a company from where it is and achieve some significant growth over the next 5 years in this sector. So that was a real attraction from my perspective. In terms of institutional investors and attracting institutional investors, I believe that they're looking for some real proof of execution and milestones. Seeing some revenues coming through. So we're really focused on that at the moment. And I think they'll see the story. I think we're in the right space that people are looking to invest in, and as we're actually proving that we're hitting our milestones, we're delivering, and we're executing with excellence, then I think that will really attract those institutional investors into the company.
David, thanks for your time. It really is a fascinating story, potentially the right place at the right time. We'll catch up with you again later in the year. Thank you.
Thanks, Tim. Thanks, everyone.
That's all we have time for, everyone. Have a nice weekend. Hopefully the sun comes out. Enjoy your time. See ya.